If you have been following the healthcare sector over the last 5 years, you have likely heard the narrative that telehealth is dead. After the pandemic boom, investors fled the sector, believing that companies like Teladoc or Amwell had no moat. For a long time, HIMS and HERS Health was lumped into that same basket. People saw it as just a website selling generic hair, loss pills, and erectile dysfunction medication. But if you look at the financial filings from 2020 through the latest Q3 2025 report, you will realize that narrative is not just wrong, it is dangerously outdated. Today, we are going to perform a deep dive, forensic analysis of HIMS and HERS, ticker symbol HIMS. We are going to deconstruct how they transitioned from a cash-burning SPAC in 2020 to a GAAP profitable compounder in 2025. We will explore why their aggressive move into compounded GLP-1 weight loss drugs is not just a short-term trend, but the foundation of a personalized healthcare empire that could dominate the next decade. To understand the magnitude of what is happening in 2025, we first have to understand the architectural shift in their business model. In the 2020 and 2021 annual reports, HIMS was essentially a marketing company. They acquired customers cheaply and sold them generic prescriptions. It was a low-margin, high-churn game. But look at the 2024 and 2025 documents. The word personalized appears everywhere. They pivoted. Instead of just reselling generic pills, they started working with compounding pharmacies to create custom dosages, hybrid treatments, and unique form factors like chewable mints. This is crucial because you cannot get these personalized treatments at a standard CVS or Walgreens. This shift built a moat around their business. It increased customer stickiness and, more importantly, gave them pricing power. Now let's talk about the rocket fuel, the weight loss segment. The investor presentations from Q1 and Q2 2025, along with the Q3 2025 10Q, reveal a company undergoing a hypergrowth phase driven by GLP-1s. While the world was fighting over branded Ozempic and Wegovy supply shortages, HIMS and HERS utilized the regulatory framework that allows for compounding during shortages. They offered access to compounded semaglutide at a fraction of the branded price. The data shows this decision was a masterstroke. Subscriber growth in 2025 has accelerated, but unlike the early days, the cost to acquire these customers is being paid back almost immediately. The unit economics have fundamentally changed. Let's dive into the Q3 2025 financial statements. This is where the rubber meets the road. Revenue is not just growing, it is accelerating at a scale that defies the law of large numbers. But the most impressive metric is the bottom line. In 2021 and 2022, critics pointed to their net losses. In 2025, HIMS and HERS is generating real GAAP net income. They are no longer burning cash to grow. They are generating free cash flow while growing. This self-funding growth model is rare in high-growth tech and healthcare. It means they do not need to dilute shareholders to fund their expansion. They have a fortress balance sheet with zero debt, a detail often overlooked in a high-interest rate environment. We must also discuss the HERS side of the business. For years, the HIMS brand dominated, but the 2025 data shows that the HERS segment focused on dermatology, mental health, and now weight loss is growing even faster than the male segment. They have successfully doubled their total addressable market by cracking the code on women's digital health. The cross-selling opportunities are immense. A customer who comes in for weight loss often stays for dermatology or mental health support. This increases the lifetime value, or LTV, of every user, while the marketing cost remains static. However, we need to address the risks found in the risk factors section of the 10K. The primary concern is regulatory. The ability to compound GLP-1 drugs is tied to the FDA's shortage list. Investors are asking, what happens when the shortage ends? Management's strategy, outlined in their 2025 updates, is to transition these customers to branded drugs or offering personalized oral weight loss kits that do not rely on the shortage designation. They are building a brand loyalty that transcends a single molecule. They are betting that customers stay for the platform experience, the ease of use, and the doctor access, not just the specific drug. So what is the verdict for the long-term investor looking at 2026 and beyond? We are witnessing the industrialization of personalized healthcare. HIMS and HERS is doing to healthcare what Amazon did to retail. They are removing the friction. The financial transformation witnessed in the 2025 reports confirms that their infrastructure is scalable. As they integrate more AI into their provider platform, their margins should continue to expand. In conclusion, the journey from the 2020 SPAC merger to the Q3 2025 earnings report is a case study in execution. They ignored the stock price volatility and focused on the customer. They have built a brand that resonates with millennials and Gen Z in a way that traditional healthcare providers simply cannot. For the investor willing to look past the regulatory noise, HIMS and HERS represents a pure-play bet on the consumerization of healthcare. The numbers prove the model works. The cash is flowing, and they are just getting started.